Welcome back to Your Average Investor, the channel that looks at my journey through investment, budgeting and finance. Today we're going to take a bit of a look back at why I actually started investing in the first place. So we're going to take a little bit of a look at kind of my background and where I started to where I kind of am now and what actually stimulated me to start investing in the first place. So it's going to be a bit more of a kind of personal video today where you get a bit of an understanding as to a little bit about me, where I've come from with regards to investing, why I started and where I find myself now. So let's start right back at the beginning then. When I was 18, I'd had a few part-time jobs, but I knew that I wanted to go away to university. So I went away to uni for 3 years to study sports science. So throughout my 3 years at uni, I obviously had a student loan which covered the tuition fees, as well as kind of accommodation, living expenses and kind of going out money. I also had a student overdraft, which at the time was 0%, so you could take up to £2,000 and you didn't pay any interest on that whilst you're actually at university. So it was a good way to help me whilst I was a student, essentially. I had some summer jobs when I went home, but I didn't actually have a job whilst I was at university on campus. I decided to concentrate mainly on kind of studying and kind of having that uni lifestyle as well. So I graduated with my sports science degree in around 2012 and had £2,000 of overdraft as well, which I had the kind of a year to pay off. In that first year after I graduated, I worked in a gym and I worked as a sports officer, so I worked there for a year. And throughout that time, I managed to pay down the £2,000 overdraft, so I was basically broke even and I didn't owe anything to the bank. When I initially left university and throughout that year of working within the gym, I kind of knew that I wanted to go back and do some extra study. So throughout the year I was working, I applied for a master's degree in sports rehabilitation. So obviously back off to university again to do my master's. Throughout this time again, I took advantage of a student overdraft just to help me finance studying again. To supplement kind of any other student loan that I had, and obviously went back to the £2,000 throughout the 2 to 3 years that I was studying for my master's degree. So after the kind of 2.5, 3 years of doing my master's degree, my dissertation again, I left university. I graduated with my master's in sports rehabilitation science, and I found myself in a retail job that I'd been doing whilst I was doing my master's. So it wasn't kind of where I expected to be after graduating from that high level qualification. But the people that I worked with there, I really got on well with, and it wasn't a bad place to work, but it wasn't where I expected to be after kind of doing the additional study. So obviously I was back in my overdraft again after graduating. I'd been at university for probably 5 to 6 years in total now, and to be honest, I wasn't in a job where I thought I could see myself the rest of my life, and I wasn't really getting paid what I would have expected to after putting that amount of time in studying either. Because of this, I decided to start to look at different ways of making money. So obviously the first place I went was YouTube, watching people's videos, how to make money online, a little bit about investing as well, read quite a lot of books and just did lots of research on the internet to kind of educate myself further at how I could make more money whilst in the job that I was in. Obviously throughout this time I was continually applying for jobs which related to my qualification, but I hadn't been successful at this point. By doing all this research, I really started to understand the strength and the importance of compounding and what a massive effect it could have on your money. At this point, however, it started to work against me because the student overdraft was now no longer interest-free and there was still a balance on there. So I had to start to pay interest on the overdraft that I had. So in essence, compounding effect was working negatively for me, meaning that I owed more money to the bank, which is not a situation I wanted to find myself in. So obviously I really didn't want this to continue. I wanted to have control of my finances, make my money work for me and begin investing, so I had the compounding effect on my side. Now, I'm a bit impatient, so I wanted to start investing straight away, but all of the research I'd done and all of the understanding I had pointed towards paying down that overdraft first, as that was earning more interest negatively than my investments could expect to earn positively. So I came to the realisation that paying down the overdraft first was the most important thing for me to do. So I did just that, and I used lots of different budgeting apps like You Need a Budget, which I've spoken about in a previous video, and this really helped me to keep track of my finances, my expenses and how I was spending my money as well. And what this enabled me to do was allocate more money for paying down the overdraft. So all this time while I started paying down my overdraft, I was still in that same retail job, earning a decent amount of money but nothing that I kind of expected to or wanted to be earning. Like I said, I continued to apply for jobs which fell kind of into the master's degree that I did, and eventually I was successful and got a job which I really wanted to get. And I became a lecturer in sport. What this essentially meant was that I became the teacher to university level students, which is something that had always really interested me and I was really passionate about. I absolutely love the world of sports science and rehabilitation, so the job was absolutely perfect for me, and it's something that, like I said, I'd always kind of wanted to do. Now this was quite a big change for me. It meant moving from down south, down near Brighton, up to Lincolnshire to live with my partner, which was obviously a big change for me with regard to moving away from my friends, moving away from my family, and moving to a different area in the country. As soon as I moved up to Lincolnshire, she and I decided to start saving for a deposit on our own house. By the time I'd been 2 months into my lecturing job, I'd completely paid off my overdraft, which meant that I was back at a balance of around zero, which was something that I'd been trying to do for a long time. Also, throughout that time, we'd started to save for this deposit for our house. However, this was a really big day for me, because now I'd paid off my overdraft, it meant that I could do what I really wanted to start doing, and that was investing in stocks, shares, and ETFs. As I've already said in the previous video, I decided that Vanguard was the best place for me to start, for a number of reasons. It's got really low fees, it offers ETFs and lots of funds out there as well, which give you great levels of diversification. So for a beginner investor, it's a great place to start. So I saved up the first £500 and invested into the Life Strategy 100, which I've done a video on previously, so I'll link that up above if you want to check it out. It's an excellent fund which is really diversified and offers you essentially to own the whole global stock market. This was about a year ago now, and since then I've invested in my Vanguard portfolio month after month, and this has grown into a portfolio of over £3,300 now. If you haven't seen that yet, check out one of my recent update videos to have a look at my Vanguard portfolio. Also, within that time, we saved up enough money to actually put a deposit down in our house, which we moved into in November of last year. Obviously that seems like quite a lot of money to find in a year, and it is, but match betting, as I've spoken about previously, has really helped me to both springboard my investments and also save money for the deposit on the house. So if you haven't heard about match betting yet, please check out one of the videos that I've done on it. Over the time of investing in Vanguard, I became increasingly interested in individual stocks and shares. And unfortunately, this isn't something that Vanguard offers at the moment. I did quite a lot of research into what fundamentals to look at, how to stock pick, and the difference between growth and dividend investing. This all culminated in me starting a trading 212 account to supplement my Vanguard portfolio, and this was made up of individual stocks and shares, which interestingly I actually started 1 month ago today. The value of that trading 212 portfolio is at around £550 now, with a rate of return of around 14%, equating to around £70 of return to me. Now this has changed quite a bit since the last video I did, but you can check out my last update in the video above. So that's kind of where I'm at now, and the whole reason that I decided to start investing and taking control of my finances was because I didn't want to continue living paycheck to paycheck, and I wanted the compounding effect to work to my advantage, rather than paying interest to banks. Now I completely changed my outlook on money, how I spent it, what I did with it, and what money actually was. And because of this, I've completely changed my whole financial outlook. I knew that when I started investing at around the age of 27, I had around 35 to 40 years of work still ahead of me, which meant that I could build up quite a sizable pot. My only regret is that I didn't start it earlier, because now I properly understand the compounding effect, I can see what an advantage investing earlier is. Now, it absolutely blew my mind that investing £50 a month for 40 years would give you a pot size of over £131,000. That's just mental to me. This obviously accounts for a 7% yield per year. However, looking at all the research and what everyone's said historically, this is what you can expect to return from the stock market. This has now completely changed my life. And instead of thinking I want those shoes or I want those trainers, instead I'm like, what would I do if I put that money into investing instead? How much could that £50 be for me in 35 to 40 years? Now, that's not to say that I don't still go out, I don't still have fun, I don't still buy myself things as well. This is an example. So all of this has completely changed my financial life, and from being at around a negative £2,000 net worth, I've developed that, I've grown that through investing and saving and spending money more wisely. All of this now means that I have over £4,000 throughout various investment accounts, and my net worth is even greater than this if you take into account the equity in my home. Now I really think this shows that anyone can do it. Like I said, I started investing because I didn't want to be living paycheck to paycheck, and I wanted the compounding effect on my side. And the more research and more reading I did into this, the more important it was to me. Just £50 can make such a massive impact to your financial future. Whether you invest it or just save it, it gives you more security. Like I've said, it was a big change for me from leaving university with that large overdraft to starting to take control of my finances, watch my spending, research and read into investing, and then decide to take the jump to pay off my overdraft, stop living paycheck to paycheck, and take control of my own financial future. Now, if I can do it, absolutely anyone out there can. It might seem difficult to find £50 a month, but if you shopped in a different shop, if you didn't buy that t-shirt on a month, or if you cancel one or two of your subscriptions that you don't really use, you can find that money quite easily. And even if you can't, save with less. Trading 212 now offer investment from just £1. So anyone can do it. The barrier for entry to investing is so low now, everyone, and I mean everyone out there, can do it. So there we have it, a little bit more of a personal video today that I hope you found quite interesting because it's given you a bit of a background to me and why I decided to start investing in the first place. If you did find this interesting, please like and comment below because I don't want to keep doing the same portfolio updates over and over again. I want to try and keep it as interesting and as dynamic as possible. So if something like this is something that you find interesting or to see in the future, let me know and I'll continue to do videos like this as well. Please do consider subscribing to the channel, as we've seen some nice growth in the channel over the last few weeks, and hopefully that will continue. Please also let me know in the comments below why you started investing, or why you started to take control of your own financial future. I find it really interesting to hear about everybody's different stories. In my next video, we're going to take a look at my Trading 212 account, because I've invested a little bit more money and I've received a few more free shares. Also, the stock market over the last kind of 5 to 10 days has had quite a turbulent time, so a little bit's changed in my portfolio since my last update. Hopefully I'll catch you there, and with that said, I'll see you in the next one.